Cryptocurrency has been a topic of discussion since its inception. Its decentralized nature threatens the traditional banking system. The people who use them embrace them for anonymity, privacy, and the lack of government control. But governments are fighting back. They want to control what they can't easily regulate. This war on cryptocurrency is happening on a global scale. Recently, governments have imposed strict regulations on cryptocurrency transactions. They claim that this is to protect consumers. However, it seems more like an attempt to control the market. Cryptocurrency supporters see this as an attack on their freedom, while governments view it as a fight against illegal activity. Please press the like button for the algorithm. Governments believe that cryptocurrencies are used for criminal activity, including money laundering and financing terrorism. While this argument holds water, it's not entirely accurate. The traditional banking system is just as vulnerable to these crimes. The real issue is control. Governments want to regulate and tax every aspect of our lives. Cryptocurrencies are viewed as a threat to this control, and they want it shut down. But the war on cryptocurrency is far from over. Supporters continue to develop new ways to secure these digital currencies. They won't give up their control without a fight. Today's topic is Coinbase, one of the largest cryptocurrency exchanges. Recently, Coinbase has been under fire for allegedly misleading investors over the trade of digital assets. This has led to multiple lawsuits from the Securities and Exchange Commission, one of which accuses the exchange of knowingly allowing the trade of securities without being registered as a broker-dealer. According to the SEC, Coinbase has been paying off former employees to not reveal the exchange's unregistered securities trading activity. The lawsuits have caused Coinbase shares to drop significantly, and the exchange is now under heavy scrutiny by regulators. Nevertheless, Coinbase denies any wrongdoing and promises to fight back against the SEC's claims. It remains to be seen how the lawsuits will affect Coinbase's position in the cryptocurrency market. Binance, the world's largest cryptocurrency exchange, is also facing a lawsuit from the U.S. Securities and Exchange Commission. The SEC is alleging that Binance allowed users to trade securities without being registered as a broker-dealer. This means that Binance may have been facilitating trades of securities like stocks, without following the proper regulatory procedures. According to the SEC, Binance failed to disclose important information to users and did not have any systems in place to prevent money laundering. The SEC is seeking monetary penalties and a ban on Binance CEO, Zhao, from operating in the securities industry. This is just the latest in a series of regulatory hurdles for Binance, as it has faced increased scrutiny from regulators around the world. Binance has issued a statement saying it will fight the lawsuit and that it takes its legal obligations seriously. However, the lawsuit has had an impact on Binance users, as the exchange has suspended trading of some cryptocurrencies in the US. In recent weeks, the cryptocurrency world has been rocked by two major lawsuits against two of the biggest players in the industry, Coinbase and Binance. These lawsuits pose significant risks to the future of both platforms and have shaken investor confidence in the broader market. The first lawsuit was filed against Coinbase by several investors who claimed that the company had engaged in insider trading. The plaintiffs allege that Coinbase employees used insider knowledge to purchase Bitcoin Cash ahead of its listing on the exchange, causing the price to skyrocket. The second lawsuit was filed against Binance, alleging that the exchange was involved in money laundering and market manipulation. Both lawsuits have the potential to significantly impact the crypto market. If Coinbase and Binance are found guilty of the allegations against them, it could lead to significant fines and even the suspension of their operations. This would cause a major disruption to the market, as both exchanges are responsible for a significant amount of crypto trading volume. Additionally, these lawsuits could have a chilling effect on the growth of the crypto industry. If investors and regulators view the industry as a haven for fraud and illicit activity, it could lead to decreased investment and greater regulatory scrutiny. In conclusion, these lawsuits represent a serious risk to the future of Coinbase and Binance, as well as the broader cryptocurrency market. It remains to be seen how these lawsuits will play out. Bitcoin has been around for over a decade now, and it's still standing strong. In fact, over the last year, we've seen Bitcoin dominance skyrocket. For those who don't know, Bitcoin dominance is a measure of how much of the total cryptocurrency market cap belongs to Bitcoin. This measure peaked at around 75% in late 2019 and has maintained a relatively high percentage ever since. So, why has Bitcoin dominance risen so much lately? Well, there are a few factors at play. One of the main reasons is the increasing demand for Bitcoin as a store of value and a safe haven asset. In times of economic uncertainty, people tend to flock to Bitcoin, driving up its price and market dominance. Additionally, the overall cryptocurrency market has seen some major volatility and uncertainty, with many altcoins failing to deliver on their promises and falling out of favor with investors. So, what does the future hold for Bitcoin dominance? While nothing is certain in the world of cryptocurrency, it seems likely that Bitcoin will continue to dominate the market for the foreseeable future. As always, it's important to remember that investing in any cryptocurrency comes with risks, and it's crucial to do your research and make informed decisions before putting any money on the line. The past few days have been tough for altcoins. A market-wide sell-off has caused many altcoins to plummet against Bitcoin. Here, we can see some altcoins bleeding on their Bitcoin pairs. From Matic to Solana, many major altcoins have experienced double-digit percentage declines in just a matter of days. As panic spreads throughout the market, traders are left wondering if this is just a dip or the beginning of a prolonged bear market. According to one crypto expert, the current market conditions are a result of over-leveraged positions and a lack of liquidity. But despite the current turbulence, the overall Bitcoin is still up over 16% year over year. January price of Solana was $13, today it's $19.00. January price of Matic was 0.74 cent, today it's 0.76 cents. January price of Ethereum was $1,500, today it's $1,840. This is just the nature of the cryptocurrency market. Ups and downs are a normal occurrence, and altcoins will continue to be volatile against Bitcoin. Thanks for watching. Remember to subscribe to our channel for more up-to-date cryptocurrency news and analysis.